Hello, traders. Hope everyone is good. Guys, here's another one, a trade breakdown on NZD. Let me check. Nzdcad. It's another interesting one. Guys, if I'm telling you that at the time of an actual analysis, I wasn't aware of surges, the magnitude of executing or the magnitude of surgeons if you want precision in your trading. Guys, I'm going to say this again. If you execute your entries on 1 minute or second based time frame, you really need precision, because one mistake, if you execute your entries on M1 or second base time frame, you use um, less than 5 pip stop loss. And if a second base time frame, even use 2.5 pip stop loss to 1.5 pip stop loss. So you really require precision. And I've been backtesting trades for the people I admire, people I want to trade like Soft Page and WWE. Those guys, um, they amass nice risk to reward daily. And what I've noticed is that they execute most of their entries, about 90% of their entries, they are executed during sessions. And they execute their entries after um, a well built case. They execute their entries after a top down analysis, after everything points bearish or bullish. They have a lot of confluence, they have rules. After even executing entries on M1, they make sure that daily hash for 15 minutes, 5 minutes, 4 minutes, each and every time frame points, if they want to take a bearish trade, points toward a bearish move before they even consider high confluence, then sessions. So guys, without the waste of time, let's get to it. I'm going to show you a screenshot before screenshot. This one. This is H2 point of interest. I'm going to explain to you why I didn't take this one, I took this one. And this trade is based on this diagram I drew a while back. You see, this is a counter trend trade. Guys, if you are trading accumulation, if the price after a lower high creates a new lower low, and you see this textbook accumulation, you do not even need a point of interest to the left. But if you have a point of interest to the left and you can identify it, it's also a good thing. But this is entirely low, and this is an accumulation in advanced structural manipulation. So this trade is based on this diagram where I buy it here and I sell it at the top. I know where to get out before this lower high because I expect the market to create a new lower high and a new lower low. So here's a trade before screenshots, and you see the price accumulated all the way to introducing this SOS. So let's get to the trade. You see, I buy it here to sell it at the top. Exactly, exactly as this diagram. Okay, yes guys, let's get to it. You see, our trade took this H2 point of interest. This H2 point of interest is identified and continued to the downside to our targets. Let me explain. The reason why, okay, before we get to an actual trade, you see that we are bearish. You see this relative high time frame structure, this low high, low high, and I leveled the structure. We trade with the structure. If we take a counter trend, we know where to get out, and we take a pro trend, and we know where to get out. We buy it here to sell it at the top. We sell it at the top to target this lower high because we expect the market to create a new lower high. Let's get to it. You see, this is the textbook accumulation. You see, at this point, you do not know if the price has broken the structure it's accumulating. Remember, we have to build our case. We have to build a convincing case. We have to, before you even consider looking for trades, we have to have confluence or everything points toward a bullish move. The reason I took this H2 point of interest, it's because this is the last unmitigated point of interest. You see, the price mitigated this point of interest. You see, this point of interest was mitigated, and it's a test for this spring. It's a test for the spring, and the spring was tested right here. This demand was closed right here, and this one, and it's the one that introduced the break of this range. This break of this range. That's the magnitude, the importance of this demand. And the price went on and came back and didn't mitigate this point of interest and continued creating a new high and created this momentum trend line. And after this point, I definitely knew that I'm bullish because our accumulation has been confirmed and the price starting to create this momentum trend line, this trend line. And I saw this important demand that sponsored the block structure was mitigated. So I expected the price to manipulate this momentum trend line and went on to manipulate this momentum trend line and also manipulate this lower high because a lot of people are buying at this point. So the market created this is an inducement. After this inducement, that's where I'm starting to look for entries. You understand? After I've built my case, I know that everything is pointing toward a bullish move. So let's get to lower time frame. Let's get to lower time frame. That's where I'm starting to look for the entries. You see, and this is Nzdcad and Canadian dollar is traded during New York session because Canada is in North America, if I'm not mistaken. And you see New York session open here and went on to create this lower high and this lower low and went on to manipulate this liquidity above. And a lot of people, let me show you something. You see, guys, this break of structure, remember, people are selling, are buying at this point because it's a lower high, it's a structure, bullish structure, and they see this where is it? Okay, here. They see this break of structure after mitigating this demand. This one, you see, this bullish move, this demand is mitigated and broke the structure. Structure. And definitely lots of people were buying at this point, and the price is just accumulating. And if you were looking for entries, you see this internal structure, bearish internal structure, it wasn't broken at this point. If you were looking for entries, that's why you had to build your case. You had to wait for a break of structure, and the price was just accumulating. It's New York session open manipulated this lower high and went on also to manipulate this lower low. Took upside liquidity and took downside liquidity, and the liquidity for the relative high time frame for this demand zone. You see, during New York session, the price creates this liquidity and manipulates it. Also, here's another liquidity manipulated, and here's another liquidity manipulated, and here's these equal highs. You see, the price is creating downside liquidity and manipulates that downside liquidity and break the structure to the upside. You see, creates these equal highs and went on to manipulate these equal highs and created these equal lows and also created this trend line. Manipulated this trend line and manipulated these equal lows. And this is during New York session, exactly Canadian dollar. And the price manipulated is broke the structure and went on to manipulate. How many liquidity were introduced and manipulated? This is the first one, first liquidity, second liquidity, third liquidity, fourth liquidity, fifth liquidity, sixth liquidity, seven types of liquidity or seven pools of liquidity were manipulated within the space of 1 minute. And at this point, we were good to take our trade. After this, and another thing, we have to trade mitigations after the price manipulates particular liquidity. We have to trade mitigations. No, we do not have to trade, or we do not have to take stop losses of retail traders together with big traders. Because at this point, I wouldn't know if the price will go all the way to this point. Let me see. This point, the price will manipulate this liquidity and mitigate this point. You see. But if, as for this point, this is the last demand zone, you can set your pending order or wait and trade the mitigation. You see, after the mitigation, and you see this bullish engulfing, that you put your order at this point. And another thing, the importance of trade management. You see, you have to take your partials, or you take your profits within a relevant structure. You know that the price will create a new high. You can target these highs, and you can take partials and break even. If the price, at this point, you take your partials and you break even, and the price return and creates and continue with this bullish structure to the upside. After this entry, the price went on to create a new high and went back to our trading range. And this happened exactly during the New York session. You see, New York session opened around this area. You see, New York opened around this area and went on to create this liquidity. You see, this liquidity, which was introduced on the previous day and went on to manipulate. You see this momentum move. It's cleared all the liquidity below. You see, and it's within, it went on to mitigate this inducement. This demand zone is very powerful because it took this low. That's why the price went back and mitigates this demand zone before went went on the upside. So let's take a close look. You see, the New York session opened and manipulated the trend line liquidity. You see, and went on. This is still New York session, and went on continued this internal structure, one internal structure, and it broke the structure and started this bullish order flow. And I won't lie, I was expecting the price to come and mitigate because it had already created this inducement. It would have been a nice entry because I expected the price to come back and mitigate. But the price won't always present what we can clearly see. But there are a lot of opportunities in the market. Even if you caught this one, even if you caught this move, this move, six pip stop loss and a target of 92 pips. Let me count. 92 divided by 6. That one is to 15. A nice trade. Um, if you close partial move or you wait it and close your top profit at these highs. Guys, as much as it is important to know where to execute your trades and to know where to get out of the trade. Trade management, that's part alone. It's difficult because I knew that the price will go on to create this lower high, but I wouldn't enter here and wait. After entering and wait and close my chart and put my take profit here, I have to manage my trade. I'm closing partials, I'm closing entire trade and wait for another opportunity to be presented. It's another task, a difficult task on its own. But guys, this was one of um, not so bad trades, if I can put it that way. You see, time and price sessions are really important. Are really important, guys. And on this trade right here, let me do a quick trade breakdown. I won't get into the details, but I'll just go through. You see, this is the distribution. First swipe by climax of UT10, and this is a first block structure. I was waiting for the market to uh, yes, it went first block structure and went on to manipulate this trend line and mitigated this last supply. And I was waiting, and this is a second block structure, and I was waiting for an entry at this point because this was the last supply and these equal highs. This IFC mitigated these equal highs, and this is a second break structure. I was waiting for price to go back and mitigate before continue to the downside. But the price just kept on dropping and dropping and dropping. But then again, there is no problem. We won't always get what we want in the market. And still, I'm still in my learning process. I'm still mastering my craft. So it's okay. So guys, hope you will enjoy this trade breakdown. Um, Please, if you have comments or suggestions or anything, please leave them in the comment section below. Also, please subscribe if you're interested, and also join our free Telegram group. Learn together and grow together. Hope we will enjoy this trade breakdown. See you on the next one. Enjoy.